Hello to everyone. My name is Anaïs and I am the FARM-D Community of Practice Analyst. Welcome to our webinar. This webinar is organized and promoted by the Platform for Agricultural Risk Management, PARM, through FARM-D and also the Inclusive Rural Finance Network. Before starting, I just wanted to quickly go over the housekeeping rules. First of all, this session will be recorded and also available online on replay and shared on our website and social media. During this webinar, we will dedicate a session for you to ask questions, but of course, you are more than welcome to just ask them also all through the webinar using the chat box on the bottom of your screen, and we will direct them. Also, I will now share the links to both of our community of practice. The first one is the Inclusive Rural Finance Network Community of Practice, which fosters collaborative knowledge sharing and coordination among IRF practitioners at IFAD. And the second one is the FARM-D Community of Practice, which is an interactive space for exchanges to receive peer-to-peer support on agricultural risk management, but also to share knowledge and best practices. Of course, we highly encourage your subscription and look forward to exchange with you there. If there is any technical issue, you can reach out through a direct message to me, FARM-D, via the chat function. And now, without further ado, I will leave the floor to Lorna for her welcoming remarks. Thank you.
Thank you very much. I wanted to welcome everyone to the IFAD Inclusive Rural Finance Community of Practice Network event co-organized with FARM-D, as Anaïs mentioned. The title today, or the theme, is Program Management Units Operationalizing Inclusive Rural Finance Activities. And as part of our Inclusive Rural Finance Action Plan, some of you may know that we are focusing on strengthening our PMUs in the execution of rural finance and value chain activities. And we have a number of activities in our agenda planned for this year and next. So in order to effectively execute these, we need to understand what is working in the PMUs and what are some of the challenges that they're facing and the support that they are requiring. So today we're absolutely delighted to welcome three very experienced PMU representatives from three very different countries and contexts: Mongolia, Moldova, and Zambia. And as you know, executing inclusive rural finance at the program level is the responsibility of the program management units. Managing lines of credit, developing agriculture financial products, working with financial service providers, monitoring and evaluations, targeting use of funds, outcome, performance, reporting, et cetera, it's all part of the job. So often PMUs must make rural finance work to support other program activities such as value chain development and market access. So learning from our colleagues and their experiences is key to better understand the challenges so we can integrate some of these lessons when we go into design and implementing our projects and programs. So it is my pleasure first to introduce you to our three panelists. First, we have Bayarma Mijidor, who is currently the manager of the Loan Guarantee Fund of Pasture Management and Market Development Project in Mongolia. She has over 20 years of experience in development finance, debt management, sustainable green finance, and rural and agriculture finance in Mongolia. Among her many accomplishments is successfully piloting Mongolia's first ever guarantee scheme for rural smallholders and agriculture enterprises. Welcome, Bayarma. Next, we have Elena Berlacu, is the Financial Services and Rural Development Manager in the Consolidated IFAD Programs Implementation Unit in the Republic of Moldova, where since 2000 she has been a credit specialist responsible for the financing activity of small and medium-sized agriculture enterprises. Among Elena's great skill set is her experience in bringing together diverse stakeholders from financial institutions, the ministries of agriculture and finance, and most importantly, working with women, youth, and men and as financial services users. And finally, Michael Bolo is the program coordinator for the IFAD Funded Rural Finance Expansion Program, RUFIP, in Zambia, where he is responsible for the management and implementation of the program. Michael has over 25 years of experience in helping to bring sustainable financial services to rural men, women, and youth in Zambia. And like Elena, Michael has a depth of experience of managing a diverse set of stakeholders. So welcome to all three of our very esteemed panelists. So just quickly, I just want to review the agenda. We expect that this network event is going to be informal, interactive, and lively. So there won't be any PowerPoint presentations. The panelists, right after I finish speaking, you've heard enough from me. The panelists will begin with a short introduction of their program of about 1 minute each. And then we will go into questions and discussions where they will be asked a question, and the question will be on the screen. And each will respond in 2 to 3 minutes. After they've all spoken, we will open the floor for discussion on the question for 5 to 10 minutes. And then we will do this for each subsequent question, time permitting. And we will sum up. The panelists will help sum up discussions at the end of the program. And finally, before we begin, I want to just make a note. There will be a survey, at least one survey, that will come up between question 1 and question 2. We encourage everybody to fill that in and interact with that as well. So with no further ado, I would like to move to the introduction phase. So please, I guess we'll start with Bayarma, if you wouldn't mind spending 1 minute or so introducing yourself.
Hello, my name is Bayarma. I'm manager of Loan Guarantee Fund under the Pasture Management and Market Development Project, which is financed by IFAD and implemented by Ministry of Food and Agriculture in Mongolia. And our project has been implementing for the last 10 years, since 2013. And the project has 2 main components. One is pasture management and the other one is market development. And the latter one would cover more inclusive rural finance aspects. And with this project, IFAD first time introduced a portfolio guarantee scheme into the project implementation first time in our country. And it was a very new concept in the country in the beginning of the project implementation period, because we didn't have such a law on credit guarantee. And in the beginning 2 years, we piloted this guarantee scheme in projects selected 5 provinces. And then during the implementation, we scaled up it throughout the country with partnering with the government special fund, which is dedicated for job creation in rural and targeting more poor individuals and small enterprises. And we directly supported over 2,200 borrowers with both line of credit and guarantee schemes. And indirectly, 30,000 beneficiaries have been benefited from our project. And we mainly targeted women individuals rather than the value chain, middle and larger scale enterprises. And 85% of our target groups are rural individuals, and then 15% is agriculture micro enterprises. And our project loan guarantee resource is $3 million, and we mobilized this resource up to $7 million in terms of the loan resource to the project target groups. And as of now, our loan repayment rate is 99%, and portfolio at risk is 1.3%, and only 10 loans defaulted out of total loans during the project implementation. And now we're more focusing on ensuring project sustainability to ensure the project exit strategy, because our project is completing by the end of this year. And in that respect, we made some changes with the partnering participant commercial banks, and the project resources comes from the bank's own capital resource rather than the project resource. Thank you.
Thank you very much, Bayarma. Let's turn to Elena, please.
Hello, everyone. I'm honored to be here today to share my knowledge in rural finance. I'm a financial services and rural development manager within the consolidated IFAD programs implementation unit. I'm saying the consolidated unit because the unit is implementing in parallel two projects that it's ongoing. These are the rural resilience project and the talent retention for rural transformation projects. And my career started with the launch of the first project in Moldova. This was 20 years ago. So probably you are wondering if this activity hasn't become routine for me. I definitely would say no, because over the time we start with the under this component or financing activity, we start with the financing of small and medium enterprises. And now we have a very large target group and the beneficiaries. That means with different products for financing of women, youth, micro entrepreneurs, small and medium enterprises, producers groups, women groups, and the other. Mostly financing is provided for investment in agriculture and agricultural related businesses, but also for some target group in rural in investment in rural businesses. As we start more than 20 years ago, from the beginning, it was created the revolving fund just to continue to provide financial services or provide finance to small farmers. It was created the revolving fund, and all the repayments are gathered in this revolving fund. And it's all the funds are provided to the same terms and conditions over the year, over the time. So this revolving fund is sustainability for the target group, just to ensure that they will have access to financial to different financial products.
Perfect. Thank you very much, Elena. And now for his own short introduction, Michael. Can you, yeah.
Hello to everyone. My name is Mike Kombulo from Zambia. I run the Rural Finance Expansion Program. This is the government of Zambia and IFAD supported program. Our mandate is to increase the use and accessibility of sustainable financial services in rural Zambia for women, men, and the youth. We've been around for 7 years, well, 8 years now. We have actually reached our completion last year in 2022 September, but we're given a no-cost extension. So this is the product we're in now. So we're going into September 2023 as our final year of implementation. We work as ROFEP at 3 levels, the macro level, the meso level, and the micro level. Basically, intervening at the macro and the meso level to improve the business enabling environment for the financial service providers to be able to conduct activities in rural areas. We also work at the macro level to de-risk the rural financial provision of the different players that are involved in the provision of financial services in rural areas. We work through basically 2 methods. One is the provision of matching grants to the macro level players. And then we provide also technical support to the macro level and meso level players. To date, we have reached out to just below 700,000 beneficiaries or households with financial services through working with 10 partners at the macro and meso level. So the macro and meso level, that's where we're looking at issues around policy development as well as regulation, and also trying to improve the financial infrastructure. And at the micro level, we have been able to engage with or to partner with 48 partners, implementing 55 projects. Our operations are national, so we are in all parts of Zambia. Zambia has 10 provinces, and we have a footing in each one of those provinces, but not each district. And in terms of gender issues, I think we've been able to reach out about 55% of our beneficiaries are female, and the others are male. So I think I'll stop here, and then we can discuss in detail what our experience has been today. Thank you.
Thank you, Michael, Elena, and Bayarma. I think we'll just go right into the questions. And the first one is, what was the most challenging aspect or element of inclusive rural finance you encountered, and what would you recommend to do better? And I think whoever would like to start can go ahead to answer that question.
Okay, I can start.
Perfect.
Yeah, well, very difficult question in that you have to zero down to one. We have had many challenges. We'll pick one and we can share that. So RUFEP, as I indicated, we do intervene using a matching grant facility where we invite different players from the sector to indicate to us by way of an application or a proposal what sort of interventions they would like to make in the rural areas. And we have a criteria that we use to be able to engage or select those partners. And one of the things that has been happening is the development of different products and also different delivery mechanisms of how financial services can actually be delivered in the rural areas. And one of the challenges that we have faced has been the long period we discovered of how much it actually takes to be able to develop a particular product, get it to a level where that product is actually, or the delivery method is actually being used by the different financial service providers to be able to get beneficiaries or clients to benefit from that. There are different challenges around there. One is the fact that we don't have much adequate technical know-how around Zambia to develop those products. So we find ourselves having to engage different experts from India, from Kenya, from other countries. And so that sort of takes long. And when we had COVID, people would not move and all that. So it sort of delayed in the actual finalizing of the products. And then when you have done that, then there's the issue of actually trying to get a buy-in from the beneficiaries that this is a new product that they can actually accept. Yeah, and then because we're a project, our projects in terms of the funding that we provide to the different players are time-bound. So by the time we're actually finalizing a product and getting it ready for the market, if you want, you find that the project period has actually ended. So the challenge is that then we, as a project, we find ourselves not being in a position to actually experience the beneficiary or the smallholder farmer actually receiving that product or receiving that loan or that insurance product at the end of the day, although the product would be there. So in terms of recommendations, what we think going forward is that there should be adequate time provided for projects like ours, where we're encouraging financial service providers to come up with innovative products that can enable them to reach the rural areas. So there should be adequate time for the actual development of a product, and also adequate time to enable that financial institution to actually test or pilot the product. So that's time. Then there's also the actual resource. It is important that we actually have a resource that, by resource, I mean, if it's a loan product, we should have credit being available for the smallholder farmer to actually access that loan product for him or her to be able to use it for cultivating a piece of land or buying whatever instruments or buying input that they would like to use for them to be able to increase their productivity. And there are also issues around the regulation, which I think at design stage, probably we did not take into account the fact that when you have designed a product, it's not, you can't just take it to the market. You also have to engage with the regulatory authorities for them to be able to accept that, yes, this product is okay for the market. And we have we did not have an influence, or we do not have a leeway on how on being able to say the regulator is going to take 6 months or is going to take 2 months. So the service provider, financial provider, would just submit their new product to the regulatory authority, in this case, a central bank, and wait for a central bank to say, yes, this particular product has been approved and we can launch it on the market. So I think it is important that we have resources for development of a product or delivery mechanism, but also adequate resources to be able to enable that particular product to be piloted or tested on the market. That's the only way, as a program, then we are satisfied that not only have we provided access, but we're actually seeing the product being used by the several or the many small farmers or small entrepreneurs that our program is targeted to reach out to. So I thought I would share that one, but we have many others that we have experienced that we are able to share. Thank you.
Michael, I'll just go directly. Bayarma, are you ready to make a comment about 3 minutes?
Yeah. As for my experience, we faced lots of challenges and difficulties, and we tried the best to solve the problem difficulties during the project implementation. And I would like to split the challenges into 2 time periods. In the short run, the most challenging part was the changing the banking staff mindset, because bank considers the rural and agriculture sector as vulnerable or risky and also seasonal. That's why they are very much reluctant to finance loans to our target groups. And that's why we took a huge time, 1.5 years, to negotiate with the participant commercial banks to agree on terms and conditions of the loan guarantee scheme, because it was a very new concept in our country, I mentioned. And also it was very difficult. There were some difference between domestic legislation and international best practice. For example, for the loan guarantee schemes, some contractual clause such as when and how to pay the claims in case of loan defaults, and how to foreclose the collateral, and have to maintain the procedures, how many days. There's this kind of regulations were difficult to agree with the commercial banks. And in the midterm, the challenges were the collateral is always issue. That's why with our projects, we cover this problem, and IFAD implemented portfolio guarantee activity to cover insufficiency of collateral, as targeting poor and low-income rural individuals and households. And again, the seasonality of business operation in our country is always challenge, and the less developed cooperatives also challenge, and financial literacy is also always a challenge, but we could support them through service providers to provide a series of trainings in terms of technological skill trainings and financial to provide the financial knowledge. Another challenge was the lack of effective competition of financial service, such as banks and non-bank institutions, due to our country's very less density per capita, and isolation and higher transaction cost was another challenge. And in the long run, the most challenging part is a sustainable financing resource, which is better to be more affordable and feasible for rural individuals and smallholders. And in this respect, government should support them through long-term stable funding, revolving funding, and some year, depending on the fiscal difficulties, the government tends to introduce some interest subsidy program, but I think this is not sustainable and one-time activity. So we have to partner with the government and developing institutions. And the biggest challenge is always the human resource, the capacity of project implementation, management skills, always a challenge. So in that respect, my recommendation would be the developing institutions better to ensure the recruitment process of PMU teams as much as transparent and more fair procedure. I know the procedure would be more bureaucratic, but it's better to hire more skillful human resources would be key success for the project implementation. And my another recommendation would be that the multilateral and bilateral development institutions such as the World Bank and regional banks, ADB, African Development Bank, Asian Development Bank, African Development Banks, need to sit together to explore the possible partnership and without overlapping interventions in particular country, and which institutions more target on large scale enterprises, and which one mid scale and which one poor scale, depending on comparative advantage. Yeah, that would be more helpful.
Okay. Thank you, Bayama. Very interesting. Elena, please, 3 minutes.
Okay.
If you can.
Yeah. Let's start with the challenging aspects that it was, and it still is to provide for the project, is to provide access to funding to the target group. This being the micro entrepreneurs, this being the women, youths that are vulnerable to climate change that we face in the last period of time, and these have no or have limited assets. And why is it challenging? Because all the financial resources of the projects, the funds of the project, are challenged. I mean, the financial services, because the project has a lot of other activities. are challenged through the partner financial institutions. These are commercial banks, non-bank financial institutions, and savings and credit associations. All these we are very well developed in Moldova. Applications for fundings are submitted first of all to the financial institutions, and according to the bank policy, they assess the risk, and of course they will require insurance collateral. It was mentioned by Amma too. And as a result, this being the very vulnerable target groups, they cannot face or they have limited access to financial resources. In this case, the project in order to exclude these limitations, were developed appropriate financial products. It was included the product, or has been developed the product, special product, the loan with the matching grant. So the grant, or the part of the grant, it was introduced in this financial package, was just to reduce the burden of insurance requirements from the financial institutions. This was a very good, let's say, way, and very well accepted by the small farmers. Another challenge the project face is the competition. In the last period of time in Moldova, there are different international organizations, different donors that are providing grants for the agricultural sector, which is at the same time a priority for IFAD projects. To face these competitions, the unit is continuously revising the terms, the conditions of the product that the project are provided, and it they are changed in such a way just to have it more appropriate to the borrowers, to the target groups, to their business and to their capacity to repay the debts. The partnership with the different associations, with the different other donors, this also help us to face this competition. As related to the guarantees or collateral requirements in Moldova, it was more than 10 years ago the guarantee fund that it's work and have different products, and the small farmers can apply for different kind of guarantees. At different conditions. Also, all these products are developed in a way just to cover the needs for different kind of farmers. From the perspective of the target group of projects, the most challenging aspect is the marketing, as they are very small and the quantity they are produced is very small. So in this way, for this or to help the farmers to face to this challenge, there are a lot of assistance provided to small farmers, like cooperation. We are trying to bring to the small farmers the concept and the advantages of cooperation. But also, let's say, bringing farmers in different associations that we are working with. These are sector associations, like producers of the grapes, table grapes, producers of milk and other different. In fact, if summarizing the above, in order to be successful in the implementation of financial services and to face to the challenges, it is necessary, and we are trying to do in this way, continuously analyze the product and to keep it to keep it very close to the demand and appropriate to each client.
Right. Thank you very much, Elena. And now I want to turn it to the crowd, the audience, the participants. And first, I think somebody we'll go to a verbal question first, and then to something in the chat box. And if you don't mind addressing, if possible, the question to one of our panelists specifically, if something's piqued your interest. If not, you can make a general one. And for people who are answering, our panelists, please keep our answers as short as possible, or maybe 1 minute, 2 minutes, so we can move on to a couple of other questions. Thank you all. So let's start then with Disarama. Sorry if I'm mispronouncing that. Why don't you go ahead and ask your question? Disarama? I'm probably pronouncing your name wrong and you're not recognizing. There we go. Okay, we can come back to you because we can't hear you. So
I think she's on mute.
Yeah, you're on mute. And in the meantime, we'll take if there's no other hands that are raised, we'll take a question from the chat. And Mark, can you pull up the first question, please? Because I can't scroll all the way back.
Okay, the first question. Oh.
Or the question that's most relevant, I think, to the challenges potentially.
Oh, now you're putting me on the spot. How about if I take the first one I see? Here's one from Carrie Max. Not sure if there will be time, but in many cases, guarantees don't result in banks or MFIs in really expanding their risk appetite to look for new markets or provide better products. What has the experience been of the PMUs regarding how effective the guarantees have been in expanding availability and affordability for financial users? I think that goes to you, Bayarma.
Sorry, what was the question? Could you please repeat?
What has the experience been of PMUs regarding how effective the guarantees have
The guarantees
been in available? Yeah, guarantee fund.
Yeah. If I'd introduced the first time guarantee concept in our country, it was 10 years ago. And that time we worked with the participant commercial banks in two types of guarantee. One is portfolio guarantee, which targets more individuals who has lack of collateral. And another one is individual guarantee, which targets more legal entities, cooperatives and SMEs, companies. And portfolio guarantee was very helpful, very effective in our country because it is less bureaucracy in terms of the paper procedure. And once the loan applicant addressed to request the loan, the banks and the bank staff assess the loan based on the all materials provided by loan applicants. And if they decide, yes, we provide loan, then the portfolio guarantee automatically would be provided to that loan applicant without requesting our guarantee fund and waiting for time and waiting for procedure and waiting for decision. It's more automatic. So it was very helpful, effective for rural, especially for rural isolated area people, individuals. And individual guarantee was pretty much straightforward, like the traditional conventional guarantee. We have to assess the guarantee materials, and then we make a decision whether to provide guarantee or not to that legal entities. So the in the beginning, we take 1% one-time upfront guarantee fee from the loan applicants. But in the lately, that time we targeted more insurance sustainability of that fund, integrating to the government system. In that time, we canceled to get the guarantee fee. My experience, I would say, on the guarantee fees always has to be requested. It should be compulsory from the loan applicants, because the loan defaulted, we have to ensure the guarantee resource fund more capitalized, more profitable manner. So yeah.
Okay, thank you.
Good. Yeah.
Thank you. Okay, so Disirama, do you have a question? No, okay.
Okay, if I may, I read the questions about the what tools do you use for measure the impact of rural finance? That I can ask that in Moldova, let's say the main tool is the survey that is done every year, but also the impact is depending of what are the indicators for impact measure, because they are different levels, different indicators. So some data or some indicators to measure the impact, it can be measure from the field when our monitoring and evaluation colleagues, specialists are in the field, and some of them, they are collected from our partner financial institutions. It's depending of the level of impact indicators. And it was another question, so if I may, small holders, farmers are not bankable as a commercial bank ever giving required financing without sufficient collateral. Need stress on the rural banking model if to resolve this issue. Based on our experiences that we face in Moldova, having also this constraints, it was accepted to be the partners in the financing activities, the savings and credit associations. I do not know if there are such experience in other countries, but these are the very small, let's say, village level financial institutions that they serve the real very small farmers. That they are the member, should be the member of these associations, and in fact these are micro loans for them to start a small or to develop, extend a small family business. And for this kind of products, the ACAs do not ask the collateral. So there are different products and at a different level for different types of the entrepreneurs, farmers, or businesses. Thank you.
Thank you. No, that's good. Here's a question for Michael, and then we'll move on to the next bigger question. Some IFAD projects provide subsidized lines of credit to financial institutions. RUFEP does not, but rather uses innovation grants, matching grants, and the credit comes from the financial institutions. What is the advantage of the RUFEP approach, please, Michael?
Thanks. A question from Calvin. Hi, Calvin. I think the advantage of the matching grant innovation facility as compared to a credit line is that, first of all, when you do a matching grant, it has to be smart. So it has to be very specific as to what you are supporting a particular FSP to actually do. For example, if you are supporting a bank or an MFI to develop a product, then first of all, we have to ensure that that product is developed. And that's what, in this case, RUFEP will be providing resources for the FSP to do. And then because we're obviously interested that that product should not just be developed and put on the table, we'd like to see that they're actually smallholder farmers or entrepreneurs that are actually accessing that product. So we include in the performance agreement as a contribution from the FSP that if RUFEP puts in this resource to develop this product, then the FSP must put in X amount of money to ensure that that loan product is actually rolled out to the market. And we have to agree to how many people, also to how many regions. So that's one advantage that we're able to include in the contract, that for us to be happy that this contract has been performed to our satisfaction. RUFEP will put in resources up to X, and bank or MFI so and so will put up to this resource, and we'll measure that by way of how many clients we're going to reach with that product. The other advantage that we have seen is also that we have been able to encourage, to introduce different financial service providers to new financial products, and which they found once they've tested the market, they find that that product is actually profitable, and then they're able to bring in their resources from their shareholders to be able to actually increase the coverage. In this case, maybe you were targeting that you would reach out to 2 districts. They could go ahead and actually reach out to 2 more districts, or even cover a province, even the whole of Zambia, because they feel that this product, which has been developed, is being tested, it works, it's bringing in actual profit to the private institution, which is the bank, that it is serving the purpose that the Zambian government and IFAD wanted, in that they are actually taking financial services to rural areas, but by showing the financial institution that it is actually possible to develop a product and be able to roll it out in a particular area and make money, then they're able to do that in different areas of Zambia. And like if you have a specific credit line, which an institution dispenses, most likely once that credit line is exhausted and the RUFEP is not there, then that will be the end of the product because it's sort of not market driven. So I think that's one of the advantages of the matching grant facilities. We've been able to pull a lot of resources from the private sector to actually cover up what RUFEP has done. Maybe I could also answer, there's another question around the farmer group being legally registered from Karim. Yeah, the fact that a farmer group is registered, it does not mean that they qualify, they have collateral. I think this just enables a group to be formally recognized. You have a face. What this enables the group to do is to be able to probably open a bank account with a bank or with an MFI. But in cases where this farmer group could actually be also a savings group, and it is registered, or it's a SAPO, it is registered. We've been working around trying to link savings groups to formal financial service providers. In that case, yes, would actually act in a way as collateral, in that the bank would then give a loan to the group. The group then uses the same mechanisms that they've been using to operate as a savings group, to be able to give out loans to each other and collect the loans. And as far as the bank is concerned, they only have one client in that one farmer group, instead of having, you know, different people that actually come into the group to the bank to be able to access the money, in which case the issue of collateral again comes in. So that's how we have seen a group acting as a collateral in a way, in that the risk of a bank to assess the credibility or the sustainability of that particular group is reduced, because they don't do the actual assessment. It's left to the group to do it, and they only deal with one group as a financial institution.
Yeah, great. Thanks. We answered a lot of questions. Thank you, guys. Let's move into the survey, and then, oh, sorry. Go ahead with the next question. Okay, let's go ahead with the next question then. Question 2, please. Can we pop that up? And then I ask our panelists to keep, well, provide us new information. We try to get as much as we can from you guys. And also, and try to keep the responses brief, please, if possible. So, to what extent did inclusive rural finance activities address the needs and interest of smallholders? And what could be done to better serve them? I mean, I think the good thing is all our panelists here have had a long experience with these projects, so they will be able to answer this question. Thanks. Let's start with Elena first, and then Bayarma, and then Michael.
Okay, thank you. Let's start with the let's say questions to how to do to meet the needs of the farmers. That means that we need to know them. To know them, there is a need for some tools. Whenever we talk to the potential beneficiaries, to project beneficiaries or potential beneficiaries by phone, in the field, during trainings, through service providers, financial institutions, we are collecting all the proposal, all the needs, the beneficiaries, the clients are telling. This including all of them, but including financial related to financial services. All these are collected, and then they are taking into consideration when developing the financial services and other assistance, technical assistance and support to the clients. Based on different assessments in terms of funding, I will mention some of the main, those identified, and what measure have been taken by us. This, it was mentioned already in the collateral. This is, let's say, yes, the main issue and the needs of the farmers just to have access to the loans. The measure that it was taken, it towards the development of this financial package loans with the matching grants. But also having a partner with the partnership with the insurance fund, collateral credit guarantee fund, and the acceptance as partner in intermediation of the project funds of savings and credit associations, that they cover really very small farmers. Long term, small farmers can access under the IFAD projects that we are implementing the medium to long term financing. Because this is very important for them, just to have the repayments a longer term, just for them to be capable to repay the loan. The package of documents that is also very important for the small. This we tried to reduce the minimum package of document that the small farmer can gather. And also for these small farmers, the project support them with the technical assistance through the service providers, just to help them to prepare the documents, to guide them in the how better to develop the business, how better to make arrangements of different activities inside of the farm. Own contribution. I hope, I think all the projects, when we are talking about the loan, there is a demand or conditions for own contribution. This loan contribution, or the size of loan contribution, is adjusted to each target group according to the classification of their business. Are they micro, small, or medium? And quite important is the technical assistance, as I mentioned, support and guidance, starting from the preparation of a package of documents to access financing to a successful business, to guide them and to okay, so in conclusion, in order to better serve small farmers and for them to meet their needs, it is necessary to take into account all the proposal collecting directly from the farmers.
Okay, thank you very much, Elena. And I'm going to, before I pass it on to Bayarma, I just want to ask you again to keep the answer short so we can get to both of you, and then move on to a few questions. Thanks. Go ahead.
For our project case, I must mention that we didn't have a matching grant and funding resources for hiring international experts or consultancies. The government gave us very strict guidance or direction that all loan proceedings has to be fully repaid to the state budget without giving any financial burdens, fiscal burdens to the state budget. And that was very challenging. And so back to the question, the most important thing is that for the smallholders is to link them to the market through connecting them to producers and processors and production producers, processors. And then to provide financing resource and trainings is more effective. But for our project, Mongolia has a feature that we have a very big land and very isolated. All the provinces and zones or districts locates very far away from each other. So in that respect, infrastructure transaction cost is very high and very harsh winter. So the business operation season is only summer, which continues for only 3 months. And but for our project, yes, I would say that we could consider the project intervention address the needs and interests of smallholders in terms of collateral. We're covering their insufficiency of collateral, and to better serve them, we supported them through portfolio guarantee scheme to improve access to finance, to solve the collateral problem. And of course, low-income people in rural area always need affordable funding resource, low interest rate, financial products they always require. And also they have a lack of financial literacy. And also, although they have a funding resource, and also some of them have to maintain in terms of technology and skilled processing ways, at least to keep security HACCP or hygienic requirements in rural, where people always have poor infrastructure. So in that respect, the financial knowledge and technological training always they request. And my recommendation would be the international financial institutions and government need to work together with private sectors to mobilize their resource, their experience, because the private sector is always the leading agent in agriculture sector. So we have to hear their private sector's experience to develop and maintain the proper value chain, to link them, to involve the smallholders into that chain, to secure their income, small income. Once we secure their small income, then the financial service providers such as banks, non-bank financial institutions, they are ready to finance loans to them, even lower interest rate. So firstly, we have to think to link them to the value chain, to develop it in a proper way. Yeah.
Thank you. Those are good points. Now, Michael, I ask you to be brief. So thank you very much, Bayarma, and we'll turn to Michael for a quick response.
Okay, thank you. To what extent the activities were met by inclusive rural finance activities? I think to a greater extent we were able to meet, but mostly around the provision of financial services. I think we have seen an increase in the usage of financial services, especially by the introduction of digital financial services, where a number of smallholder farmers are now able to make payments, receive money using their mobile phone. So that has really sort of empowered them. It has enabled them to be able to there's safety of their resources, but also in terms of time, they don't have to travel long distances to go and access that resource from a bank. So mostly it's been around payments, around loans, but limited insurance. Insurance, I think, has not been much for various reasons. But we've also seen that there's been a big jump in terms of farmers belonging to different savings groups and being able to actually save. So we could say, yes, they have been able to benefit through their various institutions. We attempted to link them to technical services by way of trying to increase their production, because as RUFEP, we are not able to provide them support in terms of how do they increase their productivity, and also how do they ensure that whatever they have produced is actually sold or there's a market. So what our target, our strategy there was to basically link them to other players on the market who are involved in the marketing and also technical support. We also attempted to limit the extent to do that through the other IFAD supported programs in Zambia that were involved in marketing and also increase of productivity. In terms of what we recommend, I think we recommend that it's important that we do some sort of blending so that as we provide what we call second generation products, these where the institutions that we've supported are actually giving out loans now, and they're also providing insurance, but that should be done in a blended manner so that as a farmer is receiving a loan to procure input, they're also receiving insurance at the same time, and we're also introducing them to usage of digital financial services so that they are saved in terms of time. So I think briefly that's what I can comment on this particular question. Thank you.
Thank you, Michael. Very good points. Okay, I think we want to, I think what we want to do is do the survey first and then open the floor to questions, correct? So let's do the survey quickly.
Yes.
I hope, and then just to make sure that we capture everybody that's participating.
I think everyone should see a question now on their screen, so feel free to answer.
Oh, okay. Yes, no thanks.
Okay, I will wait for 30 more seconds and then I will show the first results. Okay, I will close it now and okay. And I will share the results. Lorna, can you see all the results on your screen?
Nope.
Oop. Okay, then I will read the results. So the question was, to what extent do program management challenges typically affect inclusive rural finance activity performance? So we had 11 responses. And the first one, it's anonymous, and they said they have a major impact, but some rural finance activities are easier than others. Like, for example, lines of credits is comparatively easier than credit guarantees and lighter in terms of program management. Another answer was financial sustainability for farmers is the main issues. Then to a less extent, FSPs call the shots. Then large extent, also bureaucracy, challenging rules of the state. And one last one, delays in implementation, program management challenges such as inadequate planning, resource allocation, and coordination can lead to delays in implementing inclusive rural finance activities. Okay. I will now launch a second one. Okay, there you go. I will leave you, everyone, 1 minute to answer, and then we will show the results once again. Okay, since this one has a bit less success, I will just stop it now, and we can go right ahead with the answer. Okay. So this time the question was, to what extent do inclusive rural finance implementation challenges typically affect inclusive rural finance activity performance? And we got 3 answers. The first one is the high demand on preferable loans. The second one is very much in the same way as explained earlier. And the third one is implementation challenges, if they cannot be mitigated, affect performance. So thank you everyone for participating, and I guess, Lorna, if you want, we can go ahead with the third question.
Actually, I think given our timing, I think we'll just take a couple of little questions from the, not little, they're big and important questions from the group of participants, and then what we can do is, and then we'll just have a quick summary. So just maybe 1 or 2 more questions that we can pull out, and I'm sorry I have to scroll back. There's nobody, I don't think anybody's raising their hand. We can't seem to get Disarama to do this. So would any, Mark, do you see any questions that are relevant to our last theme? If not, we can just go ahead and take another question here.
Well,
Okay.
There's a question. Do you see one? Go ahead. Go ahead.
How about maybe just one person, if you could answer, if you've, because I think some of you panelists have mentioned this. How about how does the financial literacy education for smallholder farmers, how does it work, or not work, but what weight does it have to make inclusive rural finance, I assume, successful? So this is kind of a ongoing issue, I know, for a lot of our designs, is to what extent do we include rural finance and financial literacy? Thanks. Would anybody like to respond? So the importance of financial literacy for the
yes.
programs. Go ahead, Michael.
Yeah, actually, I think that was going to be one of my recommendations in the third question, if we had gotten there, in terms of how to ensure that the products that are designed, the different mechanisms of providing services that are introduced are actually accepted by the smallholder farmers and the small entrepreneurs. And that's where I think it's not enough to just develop a particular product and try and launch it or introduce it to smallholder farmers. It is very important that they are actually given the financial education, including literacy, so that they're able to understand what it actually means to be able to, for example, access a loan, or indeed to pick up insurance, what's the importance of having insurance for a particular field of maize that you have grown or animals that you're actually drilling. And does it make sense for you to actually pay for that particular service as compared to just growing your maize and keeping your cattle, and then you have climate change issues, and then you lose everything. So through financial literacy, I think under education, we are able to provide information to the farmers for them to be able to, smallholder farmers, for them to be able to appreciate that actually by spending a little bit of cash on just picking up an insurance policy, you are able to recover a lot of the resources and energy that you have used to be able to grow or to field and grow particular animals. So I think for me, that's really very, very important. If all these efforts that we are doing, be it development of products, be it introducing digital financial services, is to be accepted by the rural community. Thank you.
Thank you. I wanted to ask a quick follow-up on this. Sorry, I told Mark he could ask the question, but no, because of the financial literacy, do you think, because I think all of you have done this, do you think financial literacy for smallholder farmers is more effective and useful coming from financial service providers, so those with sort of a vested interest, or from sort of a neutral type of organization or the project itself or something like that? I don't know if somebody wanted to answer that.
If I may,
Yeah.
so we did a very large financial education for small farmers, especially I will be repeated for savings and credit associations members or borrowers, that they are the very smaller. It was done in partnership with the one fund that it was created, and we have in Moldova, especially for financial education. I mean, they are the experts providing only this kind of assistance, financial services, financial education, not only for farmers, for entrepreneurs, but also for children, also for different other type of or class population, especially rural population. The programs that we work together on the agenda for our, let's say, target group, it was just for them a different, let's say, subject related to the financial education. But what we found more important, it was that to bring to the small farmers to read the credit contracts, because usually they are not reading the contracts, and sometimes they are captured in different problems or issues. So another one, it was, let's say, how to calculate your repayment or the scale due based on your business, or how to find more appropriate financial product to you, compare different type of products with different, let's say, conditions. So almost just to not to talk so much. This was done with a special fund that it was created in Moldova, especially for this type of assistance.
Thank you, Elena. Bayarma, did you
Yeah.
have a comment?
Yeah. In our project, two types of service providers we hired, and one is for smallholders, we contracted with more neutral service providers, and that in that case, service providers subcontract with the specialized person, individual, who are more experienced in financing sector, and they go to the each and every provinces and conduct training. As for the legal entities, in that case, we invited all the loan applicants, potential beneficiaries to the capital city at their own cost. And then we provide the training, 2 weeks vacuum training. And in the first week, we conducted the financial trainings, how to calculate, have to financial cash flow analysis, something like that. And that time we hired specialized financial service providers. And the last week, the potential beneficiaries, they has to develop or prepare their business plan at their own, based on the first week's knowledge. It was our project experience. And once we run out the allocated cost for service providers, then lately we the project team, we developed the template of business plan for smallholders. And smallholders, individuals, they can fill up all the required information by their hand manuscript. That's more easier for them because they all know how to calculate their revenue and expenditure. The figures in their mind, but the problem is they don't have computer, and some promises they don't have internet or even electricity. So it's better to give the template, the business plan template, which consists of 2 or 3 pages, very simple template, and distribute them through the branch banks and non-banks financial institutions. And if they want to get a loan, they come to the bank and get a template, easy manner template, and fill up all the information and give them the banks, and then start the loan assessment procedure. So it was our experience.
Thank you very much. So I think I would like, I'm going to make this super, I want to summarize, we're 5 minutes left. I'm not personally going to summarize. I would like, the task is make an impression. What was your impression? And so we're going to ask, and I just want one sentence from each of our panelists about the impression that, the most significant impression you had from the information and the people that you've met today. So I will go first because I already planned for this. So I'm going to say one impression, and it's going to be very trite, but it's the devil is in the details. So we are here. That's it. The devil's in the details. We are hearing it all now, and I think it's important. Okay, go ahead, Elena. Your one sentence impression.
The discussion, such events are very important because during the discussion generated ideas. So, and okay. the knowledge.
Perfect. Thank you.
Very short.
Yeah, thank you. Appreciate that. Bayarma.
Thank you for organizing this event, online event. It's very effective and efficient. And the 1.5 hours is not really sufficient to share our experience and discuss in detail. So I think it's better to organize another event. Yeah,
okay. Thanks, like a series maybe on specific topics. Michael, please. Thank you.
Yeah, thanks. There's so much going on, different initiatives being taken by different programs around the world. And I think it's really important that we're able to have a way of sharing these experiences and innovations so that I think we can benefit the different countries and programs that we run. So this 1.5 hours, I mean, I've provided a lot of information, but I can imagine that there's so much out there that we don't know. Each one of us is doing implementation in our country, and the information is not going out to the others. Thank you.
Thank you, guys. And Mark, I don't know, and Inez, if you had any one sentence impressions, or I'll wrap it up.
I just would say it seems like you're dealing with so many problems and challenges. It's like whack-a-mole. One problem up here, the other one over here. You gotta fix them all at once. And I just would like to say I really love this panel, and you guys have been so stimulating of ideas and thoughts. And I agree with you, Bayarma, that we should do more with the PMU managers because they are so on the front line and doing such great work. Back to you.
Inez, did you have thoughts?
Yeah, no, I just wanted to take the chance to warmly thank our amazing speaker. It was really an interesting presentation, and also thank all of the participants and their great question on the chat. I wish we had more time. Thank you, Lorna.
Perfect. So on that note, I would like to thank Inez and PharmD and our colleagues over at PARM, and of course, Mark for giving me the words and helping out. And of course, our wonderful questions, super specific questions, which so thank you very much for putting them in the chat. And I hope that we will try to go back to our panelists with those questions and get their specific ideas. I'll certainly be interested in reading these answers myself. And so thank you very much again to the panelists, Elena, Bayarma, Michael. I hope to see you again. Maybe we'll have a series of something very specific. And I thank you all, and a very good day to our participants and colleagues. Thank you. Take good care. Bye-bye.